Japan is heavily dependent on imports for its energy, and this is where the Iran-Israel situation comes in. If this intensifies and the situation there gets worse and Iran blocks the Strait of Hormuz, you could see the price of oil go through the roof. And what Japan might have to do, because its imports are going to get really expensive, it might have to sell U.S. Treasuries. They're the biggest holders of U.S. Treasury, foreign holders. They might have to sell that to keep, to get dollar proceeds to pay for that. And that would strengthen the yen even more, and that would disrupt the carry trades even more. Tuesday, June 17th, 2025, Maneco 64, home of alternative economics and contrarian views. Yes, there's a big event going on, of course. Headline here says Trump leaves G7 early as Iran-Israel conflict intensifies. U.S. President urges evacuation of Tehran as he cuts short his time at Leaders Summit. So it's getting serious. This is from the FT. But what we're going to cover today is something that is, in my opinion, very, very important for the world's financial markets. And that's the situation in Japan. Yes, Japan. And it's got to do with the Bank of Japan, with all the government that they've been monetizing or buying for their balance sheet. And actually, indirectly, what's happening in Iran or in the Middle East with Israel could actually be a trigger. It could be very important for the situation in Japan. And I'm going to try to explain to you why. Before I do, though, I'd like to give a shout out to a couple of my affiliates, precious metals affiliates. One of them is Miles Franklin. They're US based, of course. Many of you have used Miles Franklin. If you want to find out more how to get in touch with them, there's some details below in the description. I've also got a link, a special link that you can use to register with them. But you can also give them a call and tell them that Mario or Maneco 64 sent you. Here in the UK, of course, been working with Gold Investments for many years, and many of you have been in touch with Oliver and Simon Temple. All the details are below in the description of this video or all my videos. And there's a few promo codes there where it helps you get a little bit off the offer price, but also you might want to call them and talk to them about it. So back to Japan, back to what's going on in the Middle East and why they could be related, and it could be like a trigger. So what's been going on in Japan? We have to go back a few decades, actually, basically back to the late 80s, early 90s, when the Japan, everything bubble, Japan, well, the stock market bubble, real estate bubble. Japan was like the US was up until 2024, exceptional. And the stock market in Japan went up to like almost 40,000, the Nikkei. And it was only last year that it recovered to that level. But there was a big bust in Japan in late 1989. Real estate collapsed, the value of real estate. A lot of the banks were going to go under unless there was intervention from the government via deficit spending, fiscal policy, and also by the BOJ. And the BOJ has been a pioneer, if you want to call it, in the exercise of money printing, QE. They've been way ahead of the Fed and Ben Bernanke. And this policy that they've carried out for the last few decades has kept the yen relatively weak. It has kept borrowing costs near zero and sometimes even negative up until recently. So what the rest of the world's been doing is borrowing in yen because it's been always very cheap, and the yen has been kept relatively weak. So they take the proceeds, let's say, of borrowing yen, and then let's say they take the proceeds in dollars or British pounds or euros or whatever currency, and they invest it in the higher yielding assets. And that's the Japanese yen carry trade. And that's how it works in the FX market. When you sell the yen versus, let's say, the pound, you get the pound and you take that and you invest it. But the problem is, and this has been rearing its ugly head occasionally through the years, is that when the Japanese yen appreciates very quickly, the people who have these carry trades, they need to close it out because the currency under which they borrowed their funds is appreciating. The rates are going up, so they buy back the yen, and it's like a vicious circle, and the yen continues to rise, and it affects all the asset markets, not just in Japan, but especially in the West. And that's why the Bank of Japan has had so much trouble in trying to reverse this huge exercise they've been doing. And they accelerated it even more just over 10 years ago in 2013 when Abe, Prime Minister Abe, came to power. And he put this policy in steroids, the policy, of course, being of cheapening, keeping the yen very cheap, and getting the BOJ to print and keep rates at zero. Well, at the time, the yen was very strong. It was below 100, or it went even to around 80 versus the dollar. And when I talk about it being strong, it means that the dollar price of the yen price of the dollar is low. It's a bit counterintuitive. Sometimes the FX crosses. But ever since then, actually the yen has, or the dollar has appreciated from 80. And last year, there's a problem because the yen was depreciating too quickly. And that's a problem too, because Japan is heavily dependent on imports for its energy. And this is where the Iran-Israel situation comes in. If this intensifies and the situation there gets worse and Iran blocks the Strait of Hormuz, you could see the price of oil go through the roof. And what Japan might have to do, because its imports are going to get really expensive, it might have to sell U.S. Treasuries. They're the biggest holders of U.S. Treasury, foreign holders. They might have to sell that to keep, to get dollar proceeds to pay for that. And that would strengthen the yen even more, and that would disrupt the carry trades even more. But apart from that, even if we didn't have a conflict in Middle East, this is already a problem now, this carry trade, because Japanese prices, or inflation as they call it, CPI, is running like at 2.5%, 3.5%. While if we look here at the Japanese government bond yields, they're a lot lower. So Japanese savers are being robbed blind. The real interest rates are really negative, and that's starting to show because, for example, the Japanese 40-year bond started the year, late last year, was less than 2%, and now we're at 308. The Yeah, and a few years ago, it was even near zero or negative. The JGB, the same thing. It used to be near zero. They used to have a band. They used to do yield curve control, but now it's fast approaching 148s. And one of the reasons why these yields are going up as well is because the U.S. Treasury market, European government bond markets, the longer end hasn't done well ever since they started raising rates in 2022. We've seen this bull market we've had in bonds from 1981 to like 2020. That's ended. So it's putting a lot of pressure on Japan. And the BOJ, they hold now more than 50% of outstanding JGBs that the government have issued. So they're basically monetizing the debt. And it's one of the reasons why, as well, the Japanese yen is so weak versus gold. Yes, that's the best measure. We're approaching 500,000 yen. I remember when the 400,000 level was something we were looking for. But what this is telling me is the danger here is, yes, the Japanese yen could collapse in terms of gold, and so could all other fiat currencies. So I think the Japanese yen could be the leader in this exercise. And yesterday I saw this post by Weston Nakamura. He's a Japanese-based analyst. I've had him on the channel a few years ago, and he was talking about what's going on this morning or overnight in Japan. Well, the BOJ had its meeting. It didn't change the interest rate. It stayed at 0.5, still very low. But Weston yesterday was talking about the fact that the JGB market, the Japanese government bond market, is being basically destroyed because there's one big whale, that's the BOJ, owning everything, buying everything. And you can go days in the JGB market without seeing other institutions or investors trading this stuff. So it's very serious because the government bond market in the fiat currency system is at the base of the financial system. So the BOJ has to be very careful. And what Weston is basically saying is they're between a really huge rock and a very hard place. And why is that? Well, because they're still doing QE, believe it or not. They're still doing about $28 billion every month of QE, buying government bonds. Granted, they've been tapering the amount that they do since last year from like 40 billion, and now they're at 20 billion, and they're going to continue to taper. I think it's 400 billion yen less every month. And now the announcement they made, and I think Weston was expecting the BOJ to say, we're not going to be doing QE anymore, but no, they're going to keep doing QE. And they've said that from April next year, they're only going to taper by 200 billion, which is really, how can I say, it indicates they're going to continue in this policy of buying all this debt. And they're going to come to a point where investors are going to lose total faith and confidence in the government bond market. And if that happens, well, that's the end of the yen. And it could be very serious. It could be the trigger. The Japanese government bond market, if we look here at this article today on Reuters, why is the BOJ tweaking its buying of Japanese government bonds? Well, it's because of what I told you, but they also point out that, yes, it says here, how did we get here? Japan has about 1.3 quadrillion. Yeah, it's getting a little bit like Weimar Germany, all those zeros. 1.3 quadrillion yen, or 9.07 trillion in outstanding debt securities. the world's second biggest amount after the 28.2 trillion US Treasuries market. So you can see how serious this is. It's after the US Treasury market, it's the biggest market. So if there is chaos in this market, it will reverberate throughout the world's financial market, especially the US and Europe. It says here, persistent fiscal deficits have caused Japan's ratio of debt to GDP to expand to about 250%. Yes, the highest in the developed world. Prime Minister Shigeru Ishiba said last month the nation's fiscal situation was worse than Greece's. So there you go. This is very serious, and it could be one of the triggers. It could be a black swan event for the whole world's financial monetary system. So I've been speaking about the Japanese yen carry trade and the fact that eventually it would come home to roost, that it would be a huge problem for the whole financial market. And I even have a playlist because I've been warning about this for years. I'm going to put the playlist up here in the description. I'm going to add this video to the playlist. So what's the best way for you to keep track of what's going on in Japan as to whether things are getting worse and could spill over? Well, I would keep an eye on the Japanese government bond yields. You can do that through investing.com. You go under markets, world government bonds, and you pick Japan. Like right now, for example, the 10-year yield is up 2.2 basis points. It's almost at 1.5%. Yes, it's a little bit under control now, but keep an eye on that. The higher those yields go, the worse it is for the whole world financially. The other thing that I recommend you keep an eye on is the USD JPY Forex cross, or the dollar yen. And last year, back in the beginning of, it was August, the Japanese yen, for example, had depreciated a lot. It was really weakening quickly. It was almost reaching for 165 yen you could buy with a dollar, which is very serious for Japan. And then things turned around, and the yen actually appreciated, or the dollar dropped from above 160 all the way to near 140. And that was culminated in a huge drop in the stock market in Japan that spilled over into the West. On August 5th, I think the Nikkei was down more than 10%. And so the Japanese had to step in and intervene. And by intervening, of course, they always print and buy the stuff. JGB yields had been rising as well. So keep an eye on 140. If the dollar drops below 140 or the yen appreciates through that level, things could get serious. And they could get serious as well if we start moving back up towards 160. I guess what we want here, what the bankers and investors want, is the dollar yen to stay pretty steady in a band, let's say between 140 and 150, and not move around that much. And with that, then I'm gonna just go through where things are this morning. We're a little early this morning. It's 7:02 a.m. London time. Well, gold is at 33.90. It's up about $5. High's been 34.03. Low's been 73. If you look at this chart here, weekly chart, I think gold is still looking positive. We're seeing a little bit of short-term noise with all that's going on in the Middle East. Silver has held up quite well. It's at 36.40, up about 10 cents. High's been 47 and the low's been 13. While the stock market is fairly quiet, it is down slightly. The Dow Dow futures is down 150, NASDAQ 100 is down 80, and the S&P is down about 22. Dollar's fairly quiet. WTI crude, that dropped quite a bit yesterday when there's a headline from Wall Street Journal, and I think that was bogus, that said that Iran wanted to negotiate. That was denied later on. But when that came out, oil dropped below 70 down to like 68 handle. Right now we're at 70.63. So yeah, I don't have to tell you. We'll keep an eye on what's going on vis-a-vis Iran, Iraq. And with that, I'm going to wish you all a very good day. Take care. Bye.